Why do foreign companies, from Samsung to BYD, keep clashing with the Indian government? The full story behind the tax disputes. Imagine a foreign company whose Indian branch has been earning billions in profits for years, with its products used in almost every household, and then one day, the Indian government shows up at its door with a tax demand notice of 150 crore rupees. Can you believe that such big corporations often resort to methods of tax avoidance that land them in serious legal trouble? And the surprising part is, it's not just Samsung. Global giants like Volkswagen, Vodafone, Cairn Energy, Pernod Ricard, and BYD have all been embroiled in repeated tax disputes with the Indian government. So what's the real reason behind these conflicts? And why do foreign companies keep running into controversies over India's tax system? Today, we'll dive deep into this topic. But before we begin, if you are new to our channel, don't forget to subscribe so that you are always the first to get updates on our latest videos. Now, without any delay, let's get started. South Korea's renowned company Samsung Electronics is currently facing major troubles in India. The central government has issued a tax demand notice of 150 crore rupees, approximately $601 million, to the company and its officials. The government alleges that Samsung adopted unfair means to avoid tariffs on the import of telecom equipment, essentially finding loopholes to evade taxes. Now, the company has two options: either approach the tax tribunal or take the matter to court. But Samsung's troubles don't end there. On one hand, the company has failed to capitalize on the AI boom, artificial intelligence, and on the other, its dominance in the mobile market is steadily declining. In this context, this tax dispute with the Indian government comes as yet another major blow. If we look at the amount involved in the tax notice, it constitutes a significant portion of Samsung's net profit in India, which was 8,183 crore rupees in 2023. This controversy has also impacted the company's reputation and raised concerns among investors. But Samsung is not the only company entangled in tax disputes in India. German auto giant Volkswagen was also served a record tax demand notice of $1.4 billion by the Indian government. The company was accused of evading higher taxes by importing parts for 14 of its car models in separate shipments to reduce the applicable duties. Volkswagen challenged the notice in court, and in February 2025, the Bombay High Court asked the Customs Department to file an affidavit. The government made it clear that waiving the tax could set a dangerous precedent, encouraging other companies to hide data and delay investigations. In the same series of events, another major South Korean company, Kia, has also come under the spotlight. In February 2025, Kia received a tax demand notice of $155 million. The allegation is that the company misrepresented details of the components it imported into India and paid less tax. However, Kia denied all accusations, stating that it had provided complete information to the authorities and had not violated any regulations. Now, if we talk about Vodafone, its tax dispute has been one of the most high-profile cases in India. In 2007, when Vodafone acquired Hutchison Whampoa's Indian assets for $11 billion, the Indian government issued a tax notice of over $2 billion to the company. The case went on for years in various courts, and eventually, the Supreme Court ruled in favor of Vodafone. This case was so significant that it raised serious questions about India's international image and the transparency of its tax laws. A similar high-stakes case involved Cairn Energy, a British company that got caught in a tax net during an internal restructuring in 2007. The Indian government slapped a $1.4 billion tax notice on Cairn, alleging that the company had tried to avoid taxes through a share transfer. Cairn later sold its stake to Vedanta Limited in 2011, but the tax dispute dragged on until 2022 when it was finally resolved between the government and the company. Now let's talk about France's famous liquor brand Pernod Ricard, known in India for selling popular products like vodka and Chivas Regal. In 2022, the Indian government issued a tax demand notice of $240 million to the company. The allegation was that for over a decade, Pernod Ricard had been deliberately undervaluing imported goods to avoid paying the correct amount of tax. The company argued in court that the data used by the government was incorrect and based on misleading information from the industry. The case is still pending in court. And now, moving to the Chinese electric vehicle giant BYD, build your dreams. About 2 years ago, India's Directorate of Revenue Intelligence, DRI, revealed that BYD had underpaid around 74 crore rupees in taxes on parts it imported into India. The company was accused of assembling those parts in India and selling them, but not paying taxes accordingly. When the investigation began, BYD paid the remaining tax amount, but additional charges and penalties were also imposed, and the matter remains under investigation. So now the question arises, what is at the root of these disputes? Is India's tax system too harsh, or do foreign companies see India as an easy target for tax avoidance? The truth lies somewhere in between. India's tax laws are indeed complex, and regulations related to customs, income tax, and GST change frequently. On the other hand, many companies try to exploit loopholes in these rules to avoid taxes. When the government cracks down, the matter often ends up in court. For the Indian government, these disputes are like a double-edged sword. On one hand, the government wants to promote foreign investment. On the other, it aims to maintain transparency in tax collection. If the government goes too lenient, it may encourage other companies to treat tax evasion as normal. But if it becomes too strict, investors might fear that doing business in India is too risky. These disputes also reveal something deeper. India is no longer what it once was, where tax evasion could be overlooked. Today, the government is using data analytics, AI surveillance, and advanced audit systems at every level to detect tax irregularities early. Companies that think they can continue using old tricks to avoid taxes are finding it increasingly difficult. Meanwhile, for foreign companies, India remains a massive market, but with that comes the responsibility to respect Indian laws. Because this country is no longer just a marketplace for business, it's also an arena of rules, accountability, and enforcement. Whether it's Samsung, Vodafone, or Volkswagen, every company must understand that before earning profits in India, they need to understand and comply with its tax system. And that's precisely why, in the coming years, transparency and compliance will become the ultimate benchmarks. The companies that embrace this will survive and thrive in India. Those who don't will keep facing tax notices and legal battles, damaging their brand reputation. So this isn't just a battle of government versus companies, it's a clash between India's evolving economic system and outdated, loophole-driven corporate strategies.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.